Greetings and welcome once again to another session on the Dr. Kareem Ainsley Encounter. In today's setting, we're going to be discussing that of net worth and debt to income ratio. Yes, net worth. Many people always wonder, what is my net worth? But if you don't know your numbers, then you will not be able to calculate your net worth. Your network is pivotal to know so you can assess if you are improving or if your riches and wealth is currently under erosion or has eroded to a place in which you have to file for bankruptcy. And debt to income ratio is important so we can assess the state that you're in comparison with your debt and your income. If that is something that you are interested in understanding a little bit about, then meet us on the inside. Thank you for meeting us on the inside. Let us now move into the meat of the matter which you came to devour. Network. When we speak of network, what we're speaking about is the total value of all your assets minus your liabilities. And for that reason, we had indicated to you what were assets and what were liabilities in a previous video. And if you'd like to watch that video, the link will be right above and in the description below. So your network gives you an idea as to your financial health. Yes, you're not only healthy physically and emotionally, you're also healthy financially. So you need to decide if financial health is something that you are interested in. Your network is a measure of the person's current financial health, yes, but also their financial position. What kind of position are you in? Are you in a good position or are you in a bad position? That is a question I want you to be able to answer. You see, your network represents the value of all your assets that an individual has, or if you're a company, then the company possesses minus all its liability. So why are we saying company? Because you are being positioned how to formulate a company, and you are also being positioned how to assess a company to see if it is a worthwhile investment. And as such, we'll get more into the meat of the matter. So yes, for an individual, net worth is calculated by adding up all their assets, such as their cash, their investment, and subtracting all their liabilities, such as their credit card debt, their student loan debt, their mortgage debt, and whatever other debt they may possess. So all of that will have to be subtracted. A free guide to this network calculation can help you to determine your assets and your liability, which is available using the link in the description. While you are there, please don't hesitate to sign up for our newsletter so you can get access to our exclusive content that will guide you on your financial journey. And always remember, every information that we present here is absolutely free. Now, as we look at network and we assess it based on a company's perspective, a network is also known as the shareholders' equity or the owner's equity. And this is calculated in the similar manner. It's calculated by adding up all the company's assets, such as their cash, their investment, whatever it is that they own. And then we're going to subtract it all from their liabilities, such as their loans and their accounts payable. The resulting number will represent the net worth of the company and represent the value that would be left over for the shareholders if the company were to be liquidated and all its assets were sold off just to pay debt. And when companies go into bankruptcy, the thing that you need to understand is that the stakeholders are given preferential treatment. So those persons who the company owes money, they are paid first. Whatever is left after that payment is done, the shareholders' equity or the owner's equity, then that there will be paid over to the shareholders. So if you have a common stock in a company, After liquidation has been done, that is the only time you'll see a penny of your money. So you have to understand why I always advise never invest all that you have in any company, especially when you are not the one in charge and controlling the company. People will tend to present information at times that are not true, and people can manipulate numbers, let them say things that are not accurate. So you can only invest wholly in yourself and your company. And if you are not willing to invest totally in yourself, then there's no need to invest in any other company. Now, let us get back into the meat of the matter. So, network is an important financial metrics because it provides a snapshot of an individual or a company's financial position at a given point in time. So, this here can change from time to time, because based on where the assets are located, if they're in a stock market, if they're in the cryptocurrency market, if they're in foreign exchange market, as those assets fluctuate, your net worth is also going to fluctuate based on those asset values. And the liabilities too also tend to fluctuate if the person is taking on more debt, if the person is paying down the debt. So that there needs to be considered, and depending as well on the interest rate. So it can be used to assess the financial health of a company or to set financial goals for an individual. And if you're an individual, you want to know where you are so you can determine where you need to be and the steps and measures that are needed to be taken in order to reach there. And from a company's perspective, I am giving you the concepts so as you can assess a financial statement. You can read a balance sheet and understand exactly what it is saying. So that's when we go into assessing companies to determine if they are a good fit for our investment time horizon, then we can deduce from that. So the formula, because I know that a lot of you like formula, a lot of you are mathematicians, or you just like to be a little bit above the average. So a network is simple formula. You don't need to go to college to understand this. It's just the total assets minus your total liabilities, and then what you get, that's the net worth. So to calculate it, you need to first identify all the assets that a person has, or if you're a company, then the company possesses, including the cash and the cash equivalent, investments in real estate, equipment, intellectual properties, inventories, account receivable, and deferred taxes, among other assets that are there that we have not mentioned. Then you're going to add them all up, and then this is going to give you the total asset. So that there would be the total asset. Now, the next thing we're going to have to do is to identify all the liability that a person or a company possesses, including the accounts payable, those are accounts that need to be paid, the loans that they have outstanding, the tax liabilities, the taxes that they owe, the wages that they need to pay to the staff, the salaries, the rent, the lease agreement, the interest payable, the deferred taxes, and pension, whatever it is, the post-employment benefits. We had to add up all of those, and after that is done, then we can get the number which gives us our total liability. So now that we have our total asset and our total liability, all we're going to do to get the net worth is to have the total asset minus the total liability, and the final number will give us the net worth. Let us go over an example. If a company has a total asset of $1,000 and a total liability of $50,000, its net worth is calculated by 100,000 minus the 50,000, which is equal to a positive net worth of $50,000. This means that the company shareholder equity is $50,000, and this would be equivalent to the book value. It is important to note that net worth can fluctuate over time due to the change in the value of the assets and the liabilities. So when companies are restructuring and changing their protocol, then this can affect the net worth of the company. Therefore, it is very important to do regular checks and recalculation of the net worth to get an accurate picture of a person or a company's financial position. And this is very important because people change, companies change, management change, structures change, and the companies may tend to deviate from their core principles. So it is okay to change your investment and your investment strategy. So let us look at an individual network. Say, for instance, when you add up all your network, you have 1 million, and when you check all your liabilities, you have maybe 100,000 in liabilities. Then you will have a network of 1 million minus 100,000, which will leave you with positive $900,000 in net worth. And the net worth can be calculated in different ways, but this is the way that we're going to be using at this time until we have built on this substantially, so that we can understand the different areas and different methodologies of calculating the net worth.